first learned about captive insurance companies when I was a money laundering investigator. An alert showed up on my desk, which essentially means that a client needed to be investigated. We started off looking at about 3 months of account activity. There was enough juicy stuff going on to where I rolled it back to 1 year. And what I found is that every month he sent $120,000 to an LLC in Anguilla. So naturally, we wanted to know, why are you doing that, mister? What he told us is that he had formed his own captive insurance company. Now, in his case, he was a doctor. This is fairly common for uh, common might be the wrong word, but this is a strategy that's potentially advantageous to doctors. Doctors specifically because they have a lot of different types of insurance that they need to pay for. General liability insurance, medical malpractice insurance, workers' comp insurance, right? Doctors who have a practice and they have other staff. So the list goes on and on. I didn't even scratch the surface with the different types of insurance that doctors need. So, what a captive insurance company allows you to do is create your own insurance company. A lot of tax advantages there. Number one, think about this. You're a doctor's office that's going to make $10 million. Normally, you'd have $500,000 in insurance premiums that you're paying to other insurance companies. Now that's a business expense, right? So that 500,000 you pay to the other insurance companies, that's reducing how much tax you got to pay on your income. Okay, whatever. I'm losing that $500,000. Is it saving me maybe 200K in taxes? Sure. But net, I'm out 300K. That's where a captive insurance company comes in. You create your own insurance company. Now you're not paying these guys as much. Maybe you're still buying some insurance, but you're paying them way less. And instead, you're paying your own insurance company. Now, here, we've got a benefit to pay as much as we can because we know this expense is going against our taxable income. It's reducing our taxable income. So we really want to get this money out of there. So much so, it's so attractive that the IRS created a limit hovering around, I don't know, 2 million bucks or something like that. I could be off by a couple hundred K, but it's somewhere around there, right? But you can get at least a million, 2 million dollars in this thing. So it benefits you to put as much as you can. Of course, you have to justify how much you're paying for it. So let's say you can put $2 million in this thing. You've lowered your taxable income. And now, once this money's over here, it can be invested. And there are different ways of eventually taking that out if you shut your business or when different things happen. Of course, there's tons of compliance requirements around this captive insurance company. There are a lot of IRS regulations around it. You got to follow rules. You need some sort of custodian for those funds. That custodian's going to charge you an arm and a leg. So this only makes sense if you're ready to dump millions of dollars in there. Not for everybody, but it is something to think about, especially if you're making 8 figures and you've got a lot of insurance needs. Hey, my name is Arash. I help people create plans to pay less in taxes. Did you know if you like, subscribe, and comment on my videos, you will automatically save 10% in taxes? Okay, that's actually not true. Also, I need to let you know that none of this video should be taken as tax advice. However, I would love to give you individualized tax advice. All you have to do is schedule a consultation on my website, link below.